Leib Dodell is no stranger to media or technology liability risks. He has a long background in the field. Most recently, from 2004 to 2009, he served as president and CEO of Media Professional Insurance. He's currently in the stages of planning a new specialty E&O facility based in Kansas City. Dodell thinks that the media and technology marketplaces are merging and that the insurance industry has a lot of adjusting to do to keep up.
Well, I think we're at an interesting moment in the evolution of these insurance industry segments for a couple reasons. Historically, the industry has approached media and technology and miscellaneous professional liability as separate disciplines, and businesses within insurance organizations have grown around those separate disciplines. So within a big property and casualty company, you might have a media liability unit, and then you might have a separate technology errors and omissions unit, and so forth. And I think that served the industry okay for a while. But now what we're seeing is convergence among these industries to the point where it's now well accepted that in the business community, virtually every company has elements of a media company to the extent they're distributing content, has elements of a technology company to the extent they're utilizing technology to deliver their message, which virtually every company does. And the insurance industry maybe hasn't evolved as quickly to recognize that and reorganize themselves to be able to deliver those kinds of capabilities across industry segments.
So Dodell thinks that the insurance industry might be a little slow in adjusting to new trends in media and technology risks. He thinks the industry needs to find a way to innovate, and it can.
I think that the industry is recognizing this. In fact, if you look at a lot of the literature that the companies in this space put out on their website, there's a recognition of that. It's more challenging to execute around that because a lot of these companies have been in these businesses for a while and have legacy infrastructure set up around these businesses and have large books of business with thousands and tens of thousands of policyholders. So to reorient that to be more modular and be able to bring the same capabilities to every risk, regardless of which business unit it happens to land into, is very challenging, I think, in our industry.
Dodell thinks that the insurance industry, as these media and technology risks are merging, needs to come up with some new products to address the unmet needs of some typical Main Street businesses, like Bob's Bike Shop.
I think there's a couple areas where there are gaps and very serious unmet needs. And there are really two levels that I'd like to talk about. And they're challenging for us as an industry to grapple with for reasons I will explain. Historically, the insurance industry as a whole has tried to separate ordinary commercial businesses who are content to rely on their commercial general liability policy for most of the coverage that they need from professional service firms and media firms who everyone recognizes need specialty coverages, such as those that I've underwritten. So everybody understands that the Washington Post is different from Bob's Bike Shop, and the Washington Post is not going to get media liability coverage in its CGL policy because the underwriters are not equipped to address that. And they need to come to underwriters like the businesses that I've been involved with to get specialty coverages. And the rest of the commercial marketplace may have some incidental advertising related exposure, but the CGL does just fine. That was the paradigm in the past. And I would suggest that that has completely broken down. There is such convergence now among the so-called traditional media industry and the Main Street commercial marketplace that it's artificial to treat each of those as distinct underwriting segments in an insurance operation. And I always like to say that you could pick up any newspaper in any city on any given day and find an example of what I'm talking about. That is an exposure previously thought to be unique to media companies that the Main Street business community faces. At first it was web content that everybody had a website. And so those of us who are trying to innovate in the industry started saying everybody is a publisher and everybody needs some type of cyber liability coverage. Well, now it seems like everybody is a videographer. But you can be sure that the agents and brokers who are working with the hot dog vendor or Bob's Bike Shop are not educating them about the fact that they're essentially a film production company now. And they face copyright and trademark and invasion of privacy issues that may be different in degree, but are not different in nature to what a film production company does. So that paradigm that we've operated in for 30 years, where you have media companies over here, where people like me get our hands on them, and the rest of the commercial marketplace over here, is no longer relevant. But to break that down is an extraordinarily ambitious idea, because you have challenges of education and you have challenges of pricing, because Bob's Bike Shop is likely to have a bit of sticker shock if you start presenting media and cyber liability proposals to them. So we're talking about years, I think, of education and evolution, but substantively, it's an issue that I think our industry has been slow to address. Examples are everywhere. And as an industry, I think we owe it to our customers to break down those artificial boundaries.